U.S. key interest rates stay frozen at the current level. The Federal Reserve announced the decision on Wednesday and hinted at just one rate cut this year. Our Park Kun-woo tells us more.
The U.S. Federal Reserve has maintained its benchmark interest rates once again and is forecasting fewer rate cuts to happen this year than earlier predicted. In a two-day Federal Open Market Committee meeting which ended on Wednesday local time, the committee decided unanimously to keep key interest rates at the 5.25 to 5.5% range. This was the seventh consecutive meeting where the Fed has kept its interest rates at the same level, the highest since 2001. The gap between South Korea's interest rates remained the same with a 2 percentage point difference. The Fed's decision came after U.S. Labor Department released its Consumer Price Index for May earlier in the day. The CPI in May saw an on-year increase of 3.3%, slowing down 0.1% from the previous month. Core CPI, excluding volatile food and energy prices, was up by 3.4% on year, which was 0.1% lower than previous estimates. Though Fed Chair Jerome Powell called the recent inflation report a good reading, he said it would take longer to get the confidence needed for the Fed to loosen its policy.
The most recent inflation readings have been more favorable than earlier in the year, however, and there has been modest further progress toward our inflation objective. We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%.
Also on Wednesday, the Fed predicted that there could be a single rate cut before the end of the year. That's different from its forecast made in March, when 3 rate cuts were predicted. As there are 4 FOMC meetings left in 2024, watchers are now focusing on whether the Fed will cut interest rates before the presidential election in November. Park Kun-woo, Arirang News.